Good day traders, this is Stefanos on behalf of tixee, and in today's video we'll be giving a look back of the market for the week of the 28th of March until the 1st of April. Now before we dive into the webinar, listing some of the key highlights for today, we'll be discussing AMD's steep dive after it was downgraded by Barclays analyst, as well as the NFP report that took place on Friday. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now, looking at stocks, as we mentioned during the intro, a key name that we had appearing over the week was the stock of AMD. Now, I will pull up the chart in the meantime in front of you so you can have a look. I'll keep it on the weekly time frame for now. Now, with regards to AMD, the reason why it dropped is, as we said, it was downgraded by Barclays analysts. The stock was downgraded from overweight to equal weight, and Barclays also cut its price target on the stock from $148 to $115. As we can see by the price chart right now, price is trading around about $106.5, and like we said, the actual price target that was set out by Barclays was $115. Now, overall on the week, the stock price fell by 10.45%, or $12.51 per share, and we can also see this by the candlestick that you can see right here. Again, we're looking at the weekly time frame, so this candlestick essentially represents the whole price action that took place over the previous week. So you can pretty much see that whatever gains were made in the 2 weeks prior to this week, we can see that they have been more or less negated as we're looking to trade even further lower into the lows right here if the price eventually reaches that point. So yeah, as we said, overall it was down by 10.45%, which is a pretty significant drop for a kind of stock like AMD. Now, as is usually the case, we will see stocks in the same sector, which in our case with AMD it's the semiconductor sector. We can see other stocks being similarly affected if one of them falls heavily, as is what happened with AMD. So in this case, we also had Intel Corporation, which is another stock on the platform. Now we can see that Intel Corporation also fell. And essentially, we had the stock being reconfirmed as an underweight stock with $45 as the price target. As we can see right now, the current price for the stock is $47.80. So overall in the week, Intel Corporation fell by 7.58%, or $3.93 per share. And if I zoom out a little bit on the chart, we can see that we essentially more or less double topped right here, and ever since we've been dropping, and this was from the beginning of March, end of March, around about last year. With the beginning of this year, we can see that we've pretty much just been selling off essentially since the beginning of January as well. So yeah, this is with regards to these stocks. Now moving on to Forex, the key highlight of course was the NFP report, which took place on Friday. Now the estimate on the NFP report was for 490,000 jobs to be created in the period of the previous month. However, the actual figure missed the estimate, as the actual figure came in at 431,000 jobs being created instead. With that being said though, we also had the unemployment rate, which if you remember, it usually comes out at the same time as the NFP report. Now, the unemployment rate did come in positive, as the expectation was a figure of 3.7%, while the actual figure came in at 3.6%. Now, if we combine the two figures of the NFP and the unemployment rate, they somewhat cancelled each other out, and we saw this in some of the major currency pairs. As you can see right here, we have the Euro US dollar which essentially it only rose slightly overall on the week by about 0.22% or 24 pips. And if I switch on the pound dollar, on the weekly time frame again, we'll be able to see that it did drop, but only by a little bit, around about 0.4% or 60 pips overall on the week. Now, obviously, we did have quite some volatility during the release of the event, which was at 1:30. As we can see, round about at this time was when the event was released, and we can see the overall volatility kicking in and how prices started being driven lower and lower. Again, likely the driving piece of event in this case was the unemployment rate, as we did say that the NFP came in negative. So yeah, this is with regards to Forex and these two major currency pairs. And then lastly, we're going to be looking at oil and gold. We'll be eyeing gold first. Now gold, it weakened throughout the week. I'll just switch on to the weekly time frame. So you can see that it fell overall on the week. This was off the back of a strengthening US dollar, as well as slight signs of de-escalation with regards to the Ukrainian and Russian conflict. Now, the signs of de-escalation were the fact that both parties are willing to put forward reasonable demands against each other so as to put a stop to the ongoing war. There was actually a Financial Times article saying that Russia wants, it basically listed the demands of Russia, which stated that it wants Ukraine to abandon its NATO ambitions, which was the overall sticking point from the beginning. And in exchange, Ukraine will receive security guarantees, the prospect of actually joining the EU, and the fact that it doesn't have to demilitarize. Now, the two latter points that we mentioned now, they were strictly opposed by Russia during the onset of the war, if you remember. So we can see a shift in mindset and the willing to compromise in order to reach an actual solution. Now, all of this was obviously seen as quite positive, I'd say, in the market. So we saw traders basically fleeing the safe haven assets like gold, for example, and maybe flocking more into riskier assets, and which is why we can see that overall on the week gold fell. It fell by 1.65% or $32.35. Now, if we switch this onto a line chart, essentially someone could argue that this is simply an ABC pattern, like a correction of this impulse wave right here, and we could be setting up for another move higher. But don't forget that if we get another push here, then we'll be looking at forming a double top, which could mean instead that we could get a further drop. So it's definitely going to be interesting weeks ahead with regards to gold and what kind of patterns the prices form, alongside any of the other news headlines that we're going to be receiving later down the line as well. And lastly, we're going to be looking, as we said, at oil. Now, oil, it did have a similar actually, or a worse off picture that was painted with regards to oil, which we can see it also fell during the week. Now, aside from the signs in the escalation of the Ukrainian-Russian war affecting the prices of oil, we also had reports that the US President Joe Biden could release up to 180 million barrels from its strategic reserves, which would obviously boost the supply in the market. And thus we could see oil prices being pressured even further. Overall on the week, oil prices fell by 11.95% or $13.46. And we can see also right here that we crossed below the key level of $100, which we had crossed a couple of weeks earlier, and we even went as high as $126 more or less, and we've pretty much sold off ever since and now back down below the $100 mark. We do have some key areas of support right here, which could see the prices bouncing back up or even consolidating before we can get some further signs as to what direction oil prices could go to in the future. And yeah, there you have it. This is as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.